Hey everybody, welcome back to Trades and Gains. I'm your host Max Pitts, and it looks like it's time to put your strap-ons on and strap in because 2024 is about to clock out and 2025 is revving in the pit lane. You'd think after stacking 30% gains on the NASDAQ and 25% for the S&P, we'd be throwing confetti. But no. Wall Street's over here pacing like it's waiting for test results. And the spoiler alert here is it's going to be a mixed bag of results. So here's the deal. Big tech had a baller year, but last week, not so much. Tesla was down 5%, Nvidia was down 2%, and Amazon even caught a cold towards the end of the week, dropping about 1%. Why? Because traders are cashing in, and who can blame them? When you ride a rocket all year, eventually gravity is going to kick in. Now, it's not about profit taking only, though. Our boy Jerome Powell and the Fed are lurking in the shadows, whispering, "Don't get comfy." They cut rates last week, but with all the enthusiasm of a DMV clerk. Instead of the 4 rate cuts we wanted next year, we might get to if inflation doesn't throw a tantrum in that time period either. Now, the translation to this, the Fed's parent saying, "We'll see." Now, when we look at our bond yields, they're climbing like they've got something to prove. They're currently sitting at 4.6%. At that point, growth stocks start sweating. Yields high equals stocks dry. Easy rhyme scheme to remember. You know the drill. Now, let's talk autos, because that EV hype is exactly that right now. GM's leaning on trucks and SUVs like their life rafts. Ford hybrids are carrying them, but full EVs, let's just say investors are hoping for less fumbling. Oh, and by the way, Stellantis is trying to fix the mess Dodge left under the Christmas tree. Now, if Trump hits us with tariffs on imports, prices go up, and suddenly buying American ain't looking so hot. Or worse, GM's EV credits vanish faster than your New Year's fitness resolution. Now we're smack in the middle of the infamous Santa Claus rally, that magical time when stocks rise and the S&P has about a 1.3% gain into the new year. But this year, it looks like Santa is being stuck at customs for having some suspicious stuff in his bag. The S&P 500 is down 0.1% when it would normally be closer to 1.3%. I mean, come on, we're not asking for much here, just a little jingle on those charts. So what about 2025 exactly? Here's what's cooking. And spoiler alert, it's going to be intense. Inflation's still being annoying. Congress is gridlocked, and oh yeah, Trump's back, which means tariffs, deregulation, and God knows what else on day one. Markets love stability, but let's be real. Stability isn't the word we'd use for 2025's vibe, except some shakeups, especially if inflation doesn't keep chilling out. The big question is, will Powell hold the line, or will Trump and the Fed start playing tug of war with the economy? Either way, keep your helmets on because it's going to be a hell of a ride. Now, that's all we have in today's episode. Go ahead, like, subscribe, and hit that bell because in 2025, the market's not taking days off and neither are we. I hope you all have a great day, a great week, and I will see you guys in the next one.